Hello, good morning, investors and corporate. Welcome to SET Digital Roadshow third quarter 2023 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15-minute Q&A. And during Q&A, investor may review question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite SIAM City Cement Public Company Limited to start the presentation, please. Thank you very much.
Good morning. On behalf of SIAM City Cement Public Company Limited, I would like to welcome and thank you for attending our third quarter 2023 digital roadshow. We appreciate your time and interest in our company performance. And I have the pleasure of introducing our senior executive from SCCC who join us today. First, Kun Aiden John Lynam, Group CEO. Kun Ranjan Sadewa, Group CFO.
Good morning.
Kun Montri Nitikun, CEO Thailand Cement Business. My name is Selin Tivyokawat, Head of Accounting Group Consolidation and IR. And our today presentation will cover four main agenda, starting with key highlights of financial performance, ESG 2023 outlook and way forward. And after the presentation, we will have Q&A session. You can type any question in the chat box and ask after the presentation. I would like to first, please put in this chat with us for any key highlights for the quarter in 2023 business.
Thanks a lot. Morning, everybody, and thank you for your time this morning. So just I'll set a little bit of context against the background of the highlights to quarter three. Most of you are aware we have been exposed, in fact, the world is being exposed to a massive tide of inflation, which came through from 2022 and affected our industry quite strongly as regards energy prices. And in some parts of the markets also led to a depression of demand. This also led to increase in inventory levels and some matters with cash flow. So that's the context, and what we will explain to you in quarter three. We're coming towards the end of that wave. That wave is passing through. So we're going to inform you of recovery in our margins, running down of the inventories to our inventory management approaches, and good cash flows. In terms of country by country performance in quarter three, in Thailand, it held up rather well through the whole year. In Q3, we see volumes holding up well, infrastructure spending reasonably good, in spite of the fact that the government had elections, between Q2 and Q3. And prices more or less holding up as well. So Thailand doing well, and you'll hear more about that from my colleague Kun Montri in a moment. Where Vietnam is concerned, we had a drop-off in demand early in Q2. It continues to be lower than last year, but there are early signs of recovery in Vietnam. And we're quite bullish on Vietnam in the medium and the long term anyhow. In Sri Lanka, the situation, many of you will be aware of the sovereign foreign exchange crisis, which began last year, 2022, in the second quarter. It continues to persist, affecting the overall economy and our business there as well. However, we do see a bottoming out of the situation there. GDP and inflation are improving. The IMF is involved, and government reforms are starting. So that is showing us signs of a recovery demand for our materials and products, albeit there are still pressures on pricing in that market. So that's more or less the highlights on the top line, broadly speaking. If you look at costs, as I said before, the inflation is starting to abate and subside. Yes, prices are still higher than last year, or cost is still higher than last year, but we have undertaken a lot of cost efficiency initiatives. We have a special kind of a program in each of the markets we are busy with. You'll hear a detailed outline of our program called Fit Plus in Thailand here. So what that has helped us to do is enhance margins which are already coming down into, or going up, I should say, due to energy prices lowering. And this tends to counteract the slow demand and the drop off in demand, and also the challenges we face in some of our markets on pricing. And this then has led to better cash flows and improvement in EBITDA. And you'll see a rise of Q3 over Q2 in terms of the EBITDA margins as well. On our sustainability efforts, our ESG agenda, through all of this, we continue to keep our eyes on the medium and long-term future. We continue driving up our thermal substitution rate where waste management is concerned. You'll hear an overview on our ESG activities from Montri, and we have driven down, due to investments going into this cycle, we are driving down our clinker intensity and thereby our overall carbon intensity. And that's in line with our commitment to decarbonisation and reducing our consumption of fossil fuels. So they're the highlights for Q3. Definitely the situation improving. But you will, of course, be wanting to know how does that impact on our financials. So I'll hand over now to our Group CFO, Mr. Ranjan. He'll walk you through all of our financials. Thank you.
Thank you, Adrian, and good morning, everyone, once again. As Adrian just mentioned, Q3, we had softer revenues compared to previous quarter this year and same quarter last year. Attributed by lower exports that we saw starting Q1 this year. Also lower revenues from Vietnam, both coming from lower demand, lower volumes, and also lower prices than last quarter. Sri Lanka continues to face extreme competition and had lower volumes compared to last year, but also lower prices compared to last quarter this year. So despite the lower top line, we saw a development of a better EBITDA, both in absolute terms and EBITDA margin of 18%. Just to highlight here, we continue to have restructuring expenses arising from our efforts to adapt the capacity to lower demand, and also our structures and both permanent and temporary people reductions. So if you just add back those one-off costs in Q3, the normalized EBITDA is 2.1 billion baht in Q3, corresponding to an EBITDA margin of over 20%, which is quite encouraging. Net profit more or less follows the trend of operating and group EBITDA. It's lower than Q2, primarily because of one-off adjustments or write-offs in Sri Lanka, where we impaired some old assets which are no more required considering the current demand, and also writing off some pre-operating capex expenses which we incurred last few years to grow our capacity in Sri Lanka, which is no more the case. So this slide depicts the waterfall from Q2 to Q3. And as I mentioned, you can see from Q2 to Q3, the main contribution on drop of, or let's say EBITDA development, is the sales revenue coming out lower from Vietnam and Sri Lanka primarily. We also have a lower share of profit from our associate Lana as coal prices soften. The contribution from Lana to our group is lower. However, as said earlier, we have massive gains on cost of goods coming from lower energy prices, but also, as you can see on our SG&A, which are our fixed overheads, also becoming lower quarter on quarter. more or less the same story on net income, except would like to highlight in the first 2 quarters we had forex gains from Sri Lanka, where Sri Lankan rupee had appreciated compared to Q4 last year. However, in Q3 we saw the trend going in the reverse direction. In terms of cash and operating cash flow in Q3, this was one of the best quarters we had in recent times. And as you can see, we had over 2 billion baht free operating cash flow in Q3, which allowed us to actually square off our short-term loan obligations in Q3, and we don't have any more outstanding positions in Thailand, particularly in Q4. A snapshot of the balance sheet. You may see here, end of September Q3, most of the ratios improved as our top lines and EBITDA margin, and also net income has improved from the June or Q2 position. I would like to highlight importantly the gearing short term, our long-term strategic target of 50%, and at Q3 we are coming closer to that target at 58%. In terms of overall liquidity, we based upon what I just said, after a good Q3, and even otherwise, we don't see any short-term challenge on the liquidity of the company. We are sitting on a 9 billion Thai baht committed credit facility since 2020, and we haven't used those facilities till date. Next year, as you can see on the right-hand side, this year we only have few short-term positions to be paid back. This is primarily from Vietnam and Sri Lanka. And next year we have one of the debentures getting mature in Q2, and we are working on securing the refinancing of the same. We now move to the segmental financial performance, starting with Thailand. Or as an overview, in terms of the contribution to revenue and EBITDA. In Q3 and Q2, not much difference. As you can see, Thailand has been performing pretty good. Its contribution is higher coming from the cement segment in Thailand. Almost the same trend for EBITDA contribution from different business segments. We move to Thailand. May I request Pramod to.
Thank you, Khun Ranjan, and good morning, everyone. So overall, the domestic demand in Thailand, both cement and concrete and other light building materials, I would say that in Q3 was stable compared to the previous quarter, as well as compared to Q3 last year. But by the way, looking forward in Q4, we start to see already softened demand. This is mainly because of the delay on the approval of the budget, by the new government. And we as well foresee that perhaps in Q1 next year we will facing the same issue in terms of the soft demand, and that will be improved later on after the approval the new budget by the government, after May next year. As for the price, Q3 as well, I think that was a good quarter for the price, for EC. We able to maintain the good price level. Thanks to the initiatives and also the team effort. And but when you're looking at the right-hand side, the top right, so you will see the revenue. In fact, when compared to the previous quarter, dropped around 7.5%, and compared to Q3 last year, that was around 3% drop, mainly because of the lower export clinker. Otherwise, when you compare or consider only the domestic, volume and also the domestic price, domestic revenue, in fact, improved significantly from the previous year and even better than Q2 this year as well. As a result, so we can see the better EBITDA or the bottom line at the bottom right. You will see the big improvement in terms of the EBITDA, 94% compared to Q3 last year. Or this is another 18%, better than previous quarter. So this is mainly because of the lower cost, energy cost, as well as the big effort by the team for the Fit Plus project. So you move to the next slide. So this is Fit Plus project where we implement for Thailand early of this year. So Fit F stands for the fiscal organizations, and we improve our bottom line or the EBITDA. T is about the transform to perform. So we encourage our team and our people to agile and also create the activism and promoting a culture of sustainable performance improvement. So we came up with 3 themes. You will see on the slide. The first one, growth and protect our top line. The second one, variable cost and production cost improvement. Last but not least, structural and the fixed cost improvement. If you're looking at one by one, on the growth and protect top line, we focusing, mainly 2 things. First, how we can sharpen, our pricing strategy so that we go market by market, looking at the micro market strategy. So with that, we able to have our deserved market share, as well as we able to maintain our good price, so that we able to improve our bottom line at the end. So the second one, we invest on the technical support, invest our engineer. This is to make sure that we give a better service to the customer. I'm talking about the small to medium contractor, as well as the retailer level, so that we able to maintain our good price. The second one come to the variable cost of the production, and as long as the CO2 emission is concerned, we as well looking on our ESG journey. In the meantime, we able to improve our variable cost as well, so that we came up with the key initiatives. The first one, clinker factor optimization. Later on the next session on the ESG, I will give you the details. Thermal substitution rate, TSR improvement, we able to improve already as group from 11% in 2020. Now for the first 9 months, we achieve already up to 20%. So we as well improve more on the thermal and electricity consumption, as well as we implement, try to use more on the low-lying coal utilizations. Now we aim for 60%. Last but not least, on the structural and the fixed cost, we very much focus on our linear organizations, make it fit, and this is make it agile and respond to our customer. So for example, we are streamlining our procurement and the manufacturing team. This is for the deliver the better cost, as well as we combine the logistic team together with marketing and sales team, so-called the new function commercial team. This is more focused on the customer centricity. So that's a snapshot, and I believe that we are able to improve further our performance in the next quarter. Thank you.
Let's go overseas. On Vietnam.
Let's start with Vietnam. As said earlier, Vietnam continues to see a lower demand starting from Q3, Q4 last year, with a bond repayment crisis by the big real estate players, and this sort of led into a lending constraint across the sector. Together with higher inflation and lower exports, the overall sentiment from a spending point of view was quite low in the first 3 quarters. and we continue to see lower demand for both bulk and retail in Vietnam. The EBITDA margin in Q3 is lower than what we would have expected, even with the lower volumes and prices. This is due to the one-off restructuring costs provided for in Q3 to make the company right size and also adapting to the right capacity required to serve a shrunk market. Sri Lanka, as first of all, I would like to draw your attention to the left-hand side, the gray background. You see the capacity increase in the country from 8.6 to almost 13 million tons, while the demand in the country going just in the opposite direction. So the gap between installed capacity, the number of players increasing, and the demand has just, it's 1:4 or a little more. This has obviously led to pressure on prices, as most of the players, including the two new players, they want to have their share of wallet and get their market shares. The prices have dropped substantially from the highs of 22, when we saw nearly $130 per ton, to now $80 a ton. Together with lower revenues, we also had one-off expenses, like in the case of Vietnam, adapting to the right capacity, writing off certain slow-moving items, but also the provisions for severance pay in Q3. Bangladesh has been a good performance this year, so particularly in H1. Q3 is usually a slow quarter due to the rains, etc. But we are very happy with the way we have seen the performance in Bangladesh in 2023. As you can see, compared to Q3 last year and also Q2 compared to last year, better revenues, but more importantly, much better EBITDA and EBITDA margins. Cambodia, you can see again from 2021, while the production capacity has increased, the demand has actually come down by 20%. So this leaves pressure on obviously on the prices, but happy to share that our management there in the joint venture has been able to maintain its market share and uphold certain prices in Q3, which resulted in, despite a lower top line, relatively healthier EBITDA and EBITDA margin.
Let's move to ESG session.
Yeah, thank you. So let me walk you through, our ESG journey. We as a group, in C, we are stretching our sustainability ambition 2030 targets. So I'm talking about the next 7 years. So we came up with 3 key indicators. The first one, we like to focus on specific net CO2. That's the first one. And the second one, process, the waste volume, as well as the third one, byproduct absorbed. And for the first one on the net CO2, in the beginning, we have set at 535 kilogram per ton of cementitious, but now, we set the stretch target. We like to achieve below 470 kilogram per ton of cementitious. So to achieve this kind of target, we need to bring down our clinker factor, lower to 65%. And as well as the TSR, thermal substitution rate, we need to achieve around 40%. So that we need to prepare on the second one on the process waste volume, so that we have to increase from 1 million tons, up to 1.4 million tons. Similar to the byproduct I'm talking about, slag as well as fly ash. So this one we need to prepare, from 1.4 million tons up to 1.7 million tons, to achieve this target I have mentioned. And to do that, can you move to the next slide? So This is more on how to, achieve those targets I mentioned just now. So we have come up with a CO2 emission reduction. So we came up with 3 themes. The first one more on the green portfolio. This is more on the product portfolio management. We came up with the new product where very friendly, to the environment. So as a TCMA, Thailand Cement Manufacturing Associations, we have put the target this year to reduce 1 million ton of CO2. So we alone, from INSEE, we already achieved 40%, for the first 9 months. So that's a good move for INSEE. And we as well, especially in Thailand, we able to get rid the bag cement OPC product from the market 100%, for the past already last 4 years. In the meantime, we try to accelerate, to convert product from OPC to hydraulic cement. This year we aim for 80% conversion. That, for example. And the second one, we came up with the green energy concept. So we do have the co-processing of municipal and agricultural waste. This is in our cement plant mixing with the fossil fuel. So that so far we already achieved up to 20% as a group. I will show you later on the figure. And last but not least, on the green innovation, we invest, the new technology, and of course, the CapEx. This is I'm talking about the cement grinding technology. With that, we're able to maintain our good performance of the product. But in the meantime, we're able to reduce our clinker factor. Next one, please. So this is just to show you our achievement in terms of the TSR. You already see now, in 2020, we have achieved 11%. But now in the first 9 months of this year, we already achieved up to 20.3%. This is around 83% improvement. And looking there, moving forward, I believe that, the target by 2030 up to 40%. I think this one more or less we will achieve this kind of figure. And this is not just only RDF alone, but we need to mix with the biomass, to achieve 40% target. Next one, please. Clinker factor. So this one as well, the good move on the CO2 reduction, through the clinker factor reduction here. So in 2020, we achieved at 75%, but now we bring down further this year in the first 9 months, already 72%. So that, we are looking forward to achieve 65%, by 2030. So that the snapshot, what we have implemented the initiative, and reduce CO2 reduction. Yeah. So I move next to Aiden.
Okay, just taking a look forward now across the markets. As I said, this year, 2023, has been a year of recovery from the impact of that massive wave of inflation, etc. And I think we've been able to highlight to you that we see things turning upwards, and this will continue on for the rest of this year. I'll also make comments going into 2024 as well. In Thailand, most of you will be aware that the new government was formed a little bit late, so that pushes off the development of the government budget until Q2 of next year. But we have a government here, and the tourism sector is recovering. Still got some uplift in front of it, but it is recovering. And the government is doing a lot to spur on investment. We're seeing that in the infrastructure sector. And we probably see a little bit quieter first half than normal first halves because of this budget. But once this budget is released, we'll see a better second half than you would normally see in Thailand. And there is continuous abatement of energy costs, and that's helping us. We see diesel prices, for example, softening still more room to soften, and the electricity costs and the so-called FT, or the fixed tariff index, has softened as well. So all of these costs are playing in our favor. We're an energy-intensive industry, and we've also, you heard from Montri, the outputs of our investment in our program Fit Plus are starting to come through. So our productivity is enhanced, and our consumption efficiencies of energy and other parts and materials we use has been increased. So we should see a further uplift in margins. There may be some downward pressure on prices as these energy costs drop off and abate. But as I said, our margins will be improved, and we'll be more than offsetting any softening of price through our cost efficiency. In Vietnam, it's coming out of the crisis, and we don't expect a very abrupt kind of a rebound, rather an uplift throughout 2024, probably getting back late 24, early 25 to where we were before this bond crisis, especially in the real estate sector, is concerned. But Vietnam is a good medium to long-term bet, and we are very bullish on Vietnam. The outlook is positive. You have a population which is still increasing. It's young, it's agile. The economy is very energetic, shall we say. Continued urbanization, and you will see over cycles, the GDP development is quite good, and all that speaks very well for demand for cement and for our products. There will be softening prices which persist through Q3 until the end of the year. There's only 5 weeks left of this year, but we expect an uplift in volume going through 2024, and that will also take the pressure off prices as well. In Sri Lanka, a gradual market recovery starts to continue. It's gradual as the government works to reform and to set a much better investment environment and landscape in the economy. As the imports are facilitated, more imports are expected into the country. This will tend to put pressure on inflation and perhaps a slight softening of exchange rates. We do feel, however, that being a premium player there, will be able to pass through in Lankan rupee terms any softening of the currency. And construction material prices, there is an intensification of competition, so prices will be softer than before. However, as before said, because of our premium status in the market, we should be able to hold our prices rather well through 2024. In Bangladesh, inbound remittances will stay declined. This will tend to place pressure on the local currency, on the taka. But there is an election coming up. We're expecting very stable power base, which will continue. The Prime Minister is likely to continue in her post through the next years, which augurs good for political stability in Bangladesh. And inflation will remain high. However, it's an import parity market there, and we are able to pass through import price inflation into our selling prices in the market. So the outlook for Cambodia, as was highlighted, you see about roughly 20%. That market has come down from a 10 million market to 8.2 million market, probably still softened a little bit to 8 million tons going into 2024, where it will bottom out. Activity on belts and road initiatives will soften. They don't stop, they don't collapse, but they have softened. But we see now the emergence of new government infrastructure project activity on roads and bridges. And also our JV team there in the last couple of years actually have done a lot to improve our cost efficiency. We're highly competitive cost-wise against our competitors there. And we're helped also with the tailwind of lowering energy prices. So we're expecting a good year in 2024, even if the overall market demand is depressed in Cambodia. That's the overall market recovery well underway across our group coming out of 2023 and under the motto never waste a good crisis. We have really driven our programs, our recovery initiatives, our turnaround initiatives in every part of the group. So we're fairly optimistic and bullish going into 2024, even if some of the markets are not fully in a state of recovery yet. Thank you.
The section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณค่ะ